Bam. Welcome back to Game Trader Live. This is our monthly show where we look at stock charts and investing news, whatever else is going on in the investing and trading space, and maybe even call out some trade opportunities. The year is running out. This was a short week. So, there were some companies that report earnings earlier in the week, but that's kind of died down. And then obviously the markets were closed yesterday for Thanksgiving. So, it wasn't that eventful of a week. If you were making portfolio decisions this week, it's probably not the smartest move because not everyone was there. Not all the market participants were joining in this week. So it's kind of a good time for us to look at monthly charts for November and see if we have any setups going into the end of the year. Some people like to call it a Santa Claus rally that happens every year in December. It doesn't always happen, but we'll see. I think if we look at some of the charts, it may give us some idea as to what's going on there. The other thing going on is that you have yearly actionable signals that are entering their last month of the year. So they can reverse course as people take gains on the successful trade for the year, or maybe they continue into next year. So let's look at some stocks while I have you here. What do you say? Boom. Here's a stock I was dead wrong about on the IPO, and I have no problem admitting when I'm wrong about this stuff. I still don't like Reddit here, but I didn't like it at 38 either. So it opened its first trading day. It closed at around, what was that, 50? Yeah, $50.44. It's currently sitting at $141.12. All-time high was reached just last week on November 21st of $158.49. They're doing very well. All the collaboration with Google on placing their results kind of at the top of Google search, that has definitely drawn people to it. They have somewhere around like 91 million is it monthly actives? Yeah. So they do have a lot of room to grow, or you could argue that it's actually quite small when you compare Reddit to like Twitter or Facebook or Instagram or YouTube. So I don't know what the hell to think of this. From a fundamental perspective, I really don't like it. But, like I said, there are reasons why the stock is going up or has been going up. Yeah, you have a $27 billion market capitalization. They're trading. This is a fundamental take. We're not just looking at technicals here. Let's see. They traded 163 times forward earnings, 21 times sales, and 12 times book value. 20 times their enterprise value to revenue ratio is 20. They have $1.7 billion of cash. They don't have a whole lot of debt, so that's fine. But yeah, you have a company that's making $1 billion in revenue, and they're trading they're trading at such a premium to their own sales. They're trading at 21 times sales. That seems rich, but they are growing at a time where a lot of their competitors aren't. And I think, like I said, they have some tailwinds behind them. So let's look at some of the longer term time frames on this. You have an inside week going into next week, so you can watch for a buy signal above 152.14, and that would be valid for next week, and a sell signal below 132.48. Let's go further out, see what's going on. Yeah, the monthly chart, it has not stayed inside month ever. So that's interesting. Obviously, ton of momentum in this stock right now. Quarterly chart shows the same giant ass bar, and then it's only been trading for this year, so the yearly chart's not going to provide us much. So yeah, the only real potential actionable signal I see in Reddit for next week is this inside week, and I gave you the levels that you would want to pay attention to there. Let's go check out Apple. Apple went up a bunch today. What was the news that drove Apple up is kind of my question, because we're sitting close to its all-time high again, if not, yeah, we're very close. All-time high on Apple was 237.23 back in July, and then it got to 237.49 in October, and now we're at 237.45 as the closing price, but it did get to a new all-time high of 237.81 cents. It seems possible that Apple is about to break out of this really messy range that it's been in for most of the year, or I guess the last half of this year. Or maybe we just get a slightly higher high and we go back down to test some of these other levels. Just based on what I'm seeing in the tech industry, Apple's probably going to be okay. Even if some of their products aren't that interesting anymore. So yeah, you had a very good day on the for Apple. Week up on the week. Almost took the entire month to the, let's see. Yeah, it's an outside month. Okay, well, there's your actionable signal going into next month. You have an outside month. So a breakout above 237.81 would be a buy signal, obviously, because it would be hitting a new all-time high. And then a break below the low of November, 219.71, would be a sell signal. Like I mentioned at the beginning of the episode, some people are looking for a Santa Claus rally. These inside or outside month signals going into December are going to provide us a nice guide for at least where to expect price to move if it does. Not necessarily predicting a movement, but telling you at least how to react given there's only three possible outcomes here. It breaks down lower, it goes above it, or it stays inside the previous range. So we'll see what happens there at Apple. On the quarterly chart, yeah, you had an outside quarter to the upside, and then you've had a little bit of continuation here. The quarter's not over. So I'm going to look at quarterly charts more intensely at the end of this next month, which would be the end of the year also. And then, yeah, you have an outside year to the upside buy signal in Apple. Like I said, it's entering its last month of the signal, though, so you do tend to see profit taking ahead of that. But yeah, congratulations to anyone who was long Apple this year, or who's been long Apple for a long time. You made a lot of money. It's important to note that Warren Buffett has slashed his stake in Apple in half in the last year. So maybe it's not the best time to buy Apple, but it's not the worst time to be an owner of Apple shares. Let's see what else we got here. AMD. Wow. This is a potential RevStrat year. If it closes underneath 151.05 for the year, you may have a very interesting sell signal going into next year on NVIDIA. Like I said, I'll go more in depth in that once we know where the closing price of the year is on December 31st. So I do plan on streaming on the 31st. You have an inside quarter. So you had an attempt at reversal strat to the upside, and then it went inside. So now we're still in a situation where it could just stay inside quarter. Like I said, we'll look at quarterly charts later next month, I think, in more depth. But it is important to note that yearly chart is scary looking in AMD. That is a potential reversal strat. So yeah, a sell signal for an entire year, 2025, if it drops below 121.82, which was the low of this year, and it has to close inside of this range for that to be the case. So remind me to do that, to come back and look at the yearly chart on AMD. Amazon having a very nice year. Outside quarter to the upside. That is still an actionable signal for another month. So above the last quarter's high of 201.20 would be a buy signal. Yeah, it could keep going. That's going to be a trend you see in a lot of these companies I'm talking about today. Let's see, weekly chart. Nope, not a whole lot there. Daily chart. Inside, outside day. Easy. That's very easy to see. So you had a buy signal today above 207.64. So if you bought that, you could have made, about $1. It's not the biggest move in the grand scheme of this chart. If you want to zoom out, that's the Amazon chart. See, ARM Holdings. I think these semiconductor stocks are looking interesting. They're showing more weakness than the rest of tech. I just mentioned Apple hit an all-time high today. Meanwhile, AMD is kind of in the mud. ARM Holdings is kind of in the mud. We've talked about how bad Intel's looking this year. And even high flyer like Nvidia has struggled in the last month or last weeks. People were not happy with their earnings results, apparently. And, yeah. But yeah, sorry, let's get back to, what was it, ARM Holdings? Here we go. Yeah, so ARM Holdings has not been trading for very long. I think it came out, what was it, late last year? Yeah. They're the company that licenses out the efficient chip design to all these different companies. So their clients are like Apple, AMD, Nvidia. Nvidia tried to acquire ARM, and it got rejected. The deal got rejected by, I want to say it was England at the time, but other countries were not a fan of it either. So the ARM parent company at the time, SoftBank, decided to spin it off and do an IPO, and so far so good. Yeah, you can own ARM as an individual stock now. And it's up quite a bit since its IPO. They did have, I think, a muted reaction to their earnings. The guidance from some of these companies just didn't impress Wall Street. It's not like they're doing quite well still, but I think expectations for some of these companies got very high. And yeah, so you're seeing a stock that's not at its all-time high. In the case of AMD, not at its all-time high. AMD peaked in March. ARM peaked in July. Nvidia has peaked several times here this year, but its highest was reached just this month, so ahead of its earnings. But yeah, the semiconductor industry as a whole, I think, is something to pay close attention to. So this is the monthly chart of the semiconductor ETF SMH. It was not an inside month. It was close, but sorry, it wasn't an inside month. It wasn't an outside month either. It didn't take out the high to the upside. The high was, last month's high was 245.63. This month's high was 244, or sorry, high was 226.26. Sorry, 262.26. This month's high was 261.88. So yeah, it did not take it out to the upside. So we don't have an actionable signal on the monthly chart. It is cooking up an inside quarter, but we won't know that until the end of this month. Or sorry, the end of December. So once again, I shouldn't even be pulling up quarterly charts this episode, because why? We still have another month before those become valuable. Yeah, it's a bit of a mess here in the semiconductor industry is what I'm getting at. You kind of saw a peak in the summertime, and you've had a bunch of consolidation. This is one sector that I think is of concern because of potential upcoming tariffs from the new administration in the United States. There's a bunch of rules about how Chinese suppliers will be affected, and no one really knows. So right now you have uncertainty around tariffs, and with uncertainty comes volatility, and with volatility comes some selling. And also, if you're just managing your risk, the semiconductor industry has had a run of epic proportions here, basically since the bottom during the pandemic. But just the S&P, the Van Eck Vectors semiconductor ETF, you could have bought it for $50, $54 back in March of 2020, and it's sitting at $242 right now. And that's a diversified basket of chip stocks. So I guess my point is that we're in, a 4-year-old bull market in the semiconductor industry, and some of its leaders are kind of weakening. And some of the companies in the index are doing outright terribly. Intel being one of those we keep coming back to. Yeah, you had this huge sell-off on really terrible earnings numbers, and now it's kind of recovering. It still is inside of this big, ugly red bar, so I would stay the hell away from this stock. The Biden administration is trying to get force a marriage between them and AMD or something. There's a lot of messy stuff going on at Intel. I would wait until we had more clarity before I would buy this stock, but to each their own. You did have an inside month in October, and then it closed. It did not close inside the range, so you had just slightly up on the month. That would have been an interesting rev strat setup otherwise, but nope, nothing there. It is still cooking inside quarter, which we have 1 month left there, so I don't think you need to go too crazy acting on anything there. Let's see. Is there any stocks that I should have been talking about up here? They're not really in our coverage universe. The banks are interesting, just in general. They had a nice little comeback here. Sorry, there's a monthly chart. Yeah, Bank of America, Warren Buffett's been exiting it all year, and it's doing okay. Citigroup. Basically, and this will sound insane, but anytime Citigroup is below $40, you should buy it. Unless the world's ending or they did something terrible, but yeah, if you bought it down there in the 40s or the 30s, you've made a good 75% gain this year, or in about a year, which is not bad at all for a company as boring as Citigroup. But like I said, banks aren't really our focus here. Corsair, this is very interesting. Outside month on earnings, it kind of reversed. At some point, you have to think that all the bad news is going to be priced into the stock, and I think here, and I don't own it right now. I've owned it in the past, and I will admit it's been a bit of a value trap this whole time, where a stock appears cheap, but it appears cheap because its results are decaying inside of it, kind of. But I actually like what Corsair does quite a bit. I think they own some interesting brands. It trades at a discount to its sales of 0.6. It's almost trading at book value, which is kind of insane for a tech company. 1.28 times book value. Yeah, they're losing money. They have $58 million of cash, $243 million of debt, and their market cap is somewhere around $800 million right now. The short interest has come down materially. It's only around 7.6%. Institutional ownership is at 86%, so some institutions might agree that this is kind of worth looking at down here. Book value per share is $572, and it bottomed at $559 and $562 in the last. That was in August and in September. So I guess that 560 area would be somewhere to watch. If it breaks down below that, that would be troubling. But at some point, I think the sell-off has to be over in Corsair, unless it's going to zero. But yeah, I really should not have done this episode during a football game, especially the Kansas City Chiefs. But here we are. Let's see, what else do we want to look at? Disney had an inside month and up buy signal and has recouped a lot of its gain, or a lot of its losses that happened earlier this year. Still not back to where it was in February and March, but a huge run, up 22% during the quarter. It seems like they're doing better than most of their competitors, and when I mean their competitors, I'm talking about, like, I don't know, Warner Brothers Discovery or Paramount, Comcast. Paramount's still kind of in the turd town. I don't think I have Comcast on here. No. Anyway. With respects to Disney and gaming, they're doing a really good job licensing their IP out to different studios and letting the studios kind of run with it. So you saw muted success with something like Star Wars Outlaws, but they're doing Marvel Rivals. They're doing they did, what was it, Disney Speedstorm, Epic Mickey. The output they're getting from interactive entertainment has increased. And then, Parks revenue's doing okay. ESPN, I think the bleeding has stopped at ESPN, at least for a little bit. So Disney's in a better shape than they were. And that is a very impressive month to be up 22%. Definitely a standout. I do want to mention Denny's. Denny's is still struggling. I don't think it's worth buying here. I just am going to keep pointing it out that it is an American institution that has fallen under hard times, and if someone values the brand, I think it could be interesting. Its market cap is $336 million right now, but it's down there because they have a lot of debt. How much debt exactly? Yeah, they have $400 million of debt and only $4 million of cash, and they are losing money. They're going to need cash. But anyway, Denny's is still bumping along on the bottom there, but it's been a huge fall from grace. And it's like, it's basically trading where it was during the lockdown of 2020, which I think is pretty intense. So if they survive, I think Denny's is kind of interesting here, but I see no reason to buy it. There's no evidence of a turnaround happening. And yeah, it could be a situation where they go bankrupt and then come out of bankruptcy and maybe there's a new stock that I can invest in that's better capitalized, or maybe it's taken private. I just don't want to see Denny's go away. I think the world would be worse off. EA Sports, it's in the game. Look at this. An all-time high. This is maybe the best looking chart that you'll see today. EA Sports, EA, at an all-time high. Their earnings were solid. College football sold very well. So you have an inside week cooking right now, which means next week you would look for a buy signal above 167.95 cents and a sell signal below 162.37 cents. That would be a weekly buy or sell signal depending on that. You had an outside day, so above 165 or below 162.37. Those would be your buy and sell signals on the day, respectively. Not staying inside quarter and having a hell of a year here. Yeah, EA Sports, one of the best looking charts that you'll see today. Hitting an all-time high earlier this month. I want to just see when they did that. Yeah, it was just last week. The company's stock hit an all-time high. So yeah, they're doing very well. Let's see, what else we got going on here? We should take a look at the yen. The yen tried to strengthen earlier this quarter. When we had that about a month after the crash that occurred in the Japanese stock market, you saw the yen hit a high against the dollar. The Federal Reserve continued to weaken the dollar with interest rate policy and monetary policy here in the United States this month. So you saw a little bit of a comeback from the yen, but it's still down a ton against the dollar. It's largely because Japan still has to monetize their debt, and the speed at which they're devaluing their currency is still faster than what the United States is doing right now. But, give us a few months. Maybe we can catch up, Japan. It's just tough, though, because they're experiencing inflation, and they have wage stagnance. Like, it's not... Government has had to step in and, actually decree, hey, give people 10% raises. So yeah, the yen is something I pay attention to pretty closely because it affects the Japanese video game companies that we cover, including Nintendo, which I am heavily invested in. GameStop had a really good month, and it was an inside month and up buy signal, so it traded. The range in September was 1931 to 2501. October traded inside of that range with a low of 2030 and a high of 2454. GameStop broke out above that 2454 price point, and it was up at, I think, it got over $32 this month. So yeah, quite the run on almost no real information except for I believe one of the members of the PSA group that, grades trading cards, they joined the board of directors at GameStop during the quarter. So you do have that news, and they really are going kind of all in on grading Pokemon cards. I will say that the people I know who buy and trade and try to sell Pokemon cards have said that GameStop does not really offer the best deal most of the time, and the prices that they resell stuff at kind of implies that too. It's interesting to see GameStop get back into, selling and reselling used goods or existing goods. Maybe it'll work for them, maybe it won't. Regardless of if it does or not, they have over $4 billion of cash on the balance sheet, and that has definitely provided a cushion. But at the same time, they diluted shareholders materially. I don't know what the... Let's see what the most recent short interest disclosure is for the stock. This is as of November 15th, 8.5% of the stock was shorted. So that's like 35 million shares, and there's almost 450 million shares outstanding. Anyone who thinks that the mother of all short squeeze is going to be caused here because of an 8% short interest is wrong. And yeah, I know you can be short the stock through elaborate options trades, but if the CEO is just going to keep diluting you every time a squeeze begins, it's just hard for me to care about the potential for a squeeze. And yeah, the stock was down a bunch today, but it was up on no news this week, and it went down on no news this week. But you did have a technical reason. Inside day and down was the sell signal today. So when it broke below $30.51, that was your price point to sell it at. And then there's a point that I want to bring up here on the yearly chart for GameStop. Is it still an actionable buy signal above 27.65, which was the high of last year? So we saw that happen earlier this year. The stock shot up into the 60s. Ryan Cohen screwed over all the shareholders and issued shares multiple times, and knocked the stock price down back below 30 in doing so. But you do have a buy signal. It is in effect above 27.65, but it only lasts for another month. And next year is going to be a tall order because this was an outside year. We took the outside year to the upside, but now you're going to have an instant new risk range. And we are definitely closer to the bottom of that range than we are the top. And you have to ask yourself, what happened up here? Ryan Cohen issued shares. So, actually, at a worse price than 60. But he knocked down the stock when it got up there. So I don't know why people would believe that it's going to go up there outside of like actual financial results improving at GameStop, which is entirely possible. But we're talking about a stock that's trading in the triple digits with respects to price to earnings ratio. Yeah, 220 times trailing earnings. And we don't know if they're going to be profitable or not in the next year. But yeah, still an interesting company. I just don't think it's a short squeeze candidate anymore. And people who think that, good luck. Just, I'm not cheering against you. I wish you luck. But I've exited my largest positions in that stock earlier this year. Oh, God, my green tea is the perfect temperature to drink. It's the best. Especially on a cold, snowy day here in Ohio. Let's talk about Google. Please say. Google inside year and up. Buy signal. Going, once again, expiring by the end of the year. Oh, thank you for the follow, Sir Pink. It's cooking up an inside quarter. So this is interesting. You have an outside inside quarter. We'll see what happens next month with respects to Google. The monthly chart, a little messier. On the weekly, you have an inside week, so that's something to watch. You could next week you have a sell signal below 165.61. You have a buy signal above 169.82, which was the high of this week. So that's something to watch if you want to trade it next week. I think Google's interesting because they have the regulators. They're really in the crosshairs of regulators, but a different, less heavy-handed regulation administration is coming in January, so it's going to be interesting to see what happens here. The Department of Justice has been going after Google, claiming that they may have to spin off Chrome or something. It's undeniable that Google is anti-competitive at the very least, but how does one break up Google? Do you separate the ad business from search? Because that's how they pay for their search business. Do you make them sell off YouTube? Do you make them spin off Google Maps? So far, all we're hearing is Chrome, which they don't really make money off of Chrome directly. I understand the indirect benefits, but I just think Google's one of the most fascinating stocks to watch going into next year, because I think they're one of the most vulnerable tech companies out there. With AI search engines, what's going on with Bing, OpenAI, what's going on with even Twitter, Facebook. Google search is becoming less relevant. It's still important, but it's not as valuable as it used to be. And that's 85% of their revenue and earnings comes from Google search. It's just a stock to watch. They had some decent numbers. They continue to post very solid numbers. They make a ton of money. All these big caps make a ton of money. But there is regulatory risk to owning Google when compared to some of these other companies. I just want to mention the GoPro's not dead. My God. TikTok search is how do I put this? Ass. That's I don't know. I mean, by all means, TikTok. I don't know what else to say. It's certainly a thing. But yeah, GoPro exists. This was a $90 stock. Let's see, when was that? This stock hit $90. $98 on October 10th, 2014. It's currently trading for $1.23. Yeah. It's funny that you mentioned TikTok search though, Scanner, because we post to TikTok, obviously. We do our where is Zer, right? The Zer video we post to TikTok. It was born on TikTok. And the idea was people still want to know where Zer is and what Zer is selling, but the TikTok algorithm wants you to make a vertical video and put music behind it. So that's when I said, Zer starts with the letter X. DMX had just passed away. So we figured out a way to honor Zer and DMX every week with a video. And it worked. That video does well. And you will see, we're not being shoved into the For You on TikTok. We are literally getting views from people searching. And TikTok analytics do show you that. Bet the business on it? No. And especially because they're about to get banned here in the United States. It's kind of been radio silent from both administrations about that. But I can't imagine that the incoming American administration is going to be more TikTok fans than the current one. But all that stuff about ByteDance having to divest and everything, that's still all on the table right now. It just hasn't really been talked about much. But yeah, TikTok search is an interesting concept. It also, TikTok's really pushing their shop right now as another way to monetize content. But yeah, GoPro, not dead yet. I own a little bit of it, mainly as it's priced like a stock option. It's priced at $1.23 a share. So it's I'm going to buy some shares just in case they get acquired. I do think GoPro does make a decent product. It's largely been commoditized, but some of their IP is solid. The brand itself, I think, is worth something. So it is something that I own. Like, my portfolios consists of like very good companies and like the worst downtrodden turds you've ever seen in your life. But yeah, GoPro's trading at $190 million market cap. They could easily be acquired, but you really have to ask yourself, why would the company acquire them? You're talking about discount to sales of 0.2. So it's for every, like, they're making almost $800-900 million in sales a year, and they're being valued at less than $200 million. They're actually trading at their book value right now, which is kind of crazy. They're not super debt laden. They have about $130 million in cash, $127 million of debt. $125 million of debt. The main problem is that they're not profitable. So if they keep losing money, they may not be able to fulfill their debt obligations. But I do find GoPro interesting. Like I said, full disclosure, I do own. Yeah, you're right. I think, no, Scanner, you're dead right. Double whammy for sure. I think that they captured early on, they captured the point of view capture market, like with their helmet-based cameras and stuff, and action cameras. And then, yeah, by CES 2017, DJI had entered the market, and there's a lot of other Chinese OEMs that you may not even know their brand name, but they're basically GoPro Hero 5 clones that cost half the price or a third of the price. So I do think that I think competition from China specifically hurt them. But like, it wouldn't surprise me for one of those better, higher margin Chinese companies to just acquire GoPro, kind of like what happened with the Lenovo brand when IBM sold off their ThinkPad division. I could see someone just acquire GoPro just for the brand at this point. It's that cheap relative to where it's been. But yeah, you're right. And then your point of view capture, influencer footage, and like, I think that the other thing that we're not really talking about is the iPhone itself. Its evolution as a camera has definitely hurt GoPro. But like I said, I find it interesting though, because like, I'm not out here looking for, like, I already own Nvidia, right? But like, I'm not looking for stock charts that look like Reddit. I'm really not. As a value investor, this is not what I'm looking for. I'm looking for things that are in the dumps. So like, Teladoc is an example of that. This is a stock that hit $320 during the lockdown and during the pandemic, the escalation of the pandemic. It's sitting at $11.98 today. It bottomed at around $7 earlier this year, $6.76. Could almost doubled your money if you bought it in September. I think telemedicine is a huge secular growth area, but there's a lot of competition in the space now, and they really did not take advantage of this hype. They could have issued some shares up here and acquired some of their competitors or something. So the management, I thought, did a pretty bad job with managing expectations up here, and then also just the way that it's been kind of bleeding out. The problem is, like, instead of paying Teladoc, hospitals are hiring their own devs and building their own version of a telemedicine infrastructure. Not always. I'm looking for stocks that are just cheap. And by definition, you're not going to be trading at your highs if you're cheap. It's very rare that a stock will be trading at all-time highs and it will be the deal of the century. Historically, that had, like, Tesla is an example of that, where in the past, you look at past highs in Tesla. I'm not saying to buy Tesla now, but I'm saying, like, at one point people thought this was the high in 2020, right? Or even back further, they thought this was the high. So it's not necessarily, it's at an all-time high, that means I have to avoid it, or, it's at an all-time low, I have to buy it. It's just that right now, the broader market is sitting at an all-time high. This is the S&P 500, which means most stocks are trading near the high valuations of, like, they've ever had. So that's true of, like, Apple. That's true of Amazon, right? I'm looking for outliers, I guess is what I would say. And it's not just It's not just chart analysis in this case. Chart analysis will give you one part of the picture, but the other part is when I break down the fundamental analysis and stuff. So when I mention like book value and GoPro, what that means is if GoPro liquidated their company, like all their assets, right? If GoPro liquidated all their assets, paid off all their debts, and distributed the money out, shareholders would lose $0. It would be break even right here. So historically, Benjamin Graham, the father of fundamental investing, like he wrote this book about fundamental investing. He came up with this concept called the margin of safety. You want to buy, and this is not trading, this is more investing, right? So you want to buy companies when they're trading at a discount to their book value of at least 25%, so that in the event of a liquidation, you make 33%, right? So if you own something at 75% of book value and then it sells for book value, you make 33%. Now, it only works if the company's not losing money rapidly. Because if they're losing money, it means that each quarter their book value is going down. So that's the problem with GoPro right now, is that they have not proven that they know how to stop losing money. And that's why the stock's trading where it is. But most of the time when I find value picks, it's because they're struggling. And a good example is Nintendo during the Wii U era. This time period here, they released the 3DS, they released the Wii U, and then they went on to have 3 consecutive years of losses. Oh, sorry, I don't have the chart up. They launched the 3DS, they launched the Wii U, and then 3 consecutive years of being just in the toilet. If you were scooping up shares down there, you were buying them between $3 and $5. The stock's currently at $14.65. So that's what I'm talking about. It's like it's about getting in when no one wants to get in, but knowing that you have something of value there. That's the trick. That's the trick, is finding a company that the market is wrong about. That's the trick. That is the hardest part of this, is not just finding a downtrodden company, finding a downtrodden company where the valuation is over-exaggerating how bad things are. And you can see it on the other side too, right? Where if I wanted to short a stock, find a thing where the market is wrong to the upside. And I mentioned it earlier, I don't think you were here, but Reddit is an example of that. I'm wrong about Reddit. I've been wrong about Reddit. I do not think Reddit is worth $141 a share. But the market thinks it is. And I'm glad I didn't short this thing. But when I look at it, I say, this is probably a short, not a buy. But I'm not going to get in the way of it, because clearly the market has decided that it's a buy because of what's going on with Google, what's going on with their own personal trends. And I think people are kind of diversifying away from Google. But yeah, so I guess like it's kind of been a theme of this show since I started it. Yeah, they're getting a huge benefit from the search engine result placement of their threads. Reddit threads are showing up for so many keywords now that it's undeniable that they're going to have a benefit from that. But then, if you on this side, yeah, they have a benefit. Next year, they're going to be lapping that benefit. And that's where the numbers turn. And then suddenly you go from, oh, wow, they're growing at 90%, or they're growing really fast, to like, oh, they're not growing anymore. Or they're growing slower than they did last year. And that's when you see the multiple being applied to their company's earnings and their sales contract. We saw that with Facebook. We've seen it with Google. It happens. We've seen it with Twitter in the past. I think, yeah, might as well look at the meta stock here, since we brought it up. Facebook's really interesting with respects to that, because you had a stock that, right here, which was like 2021, the stock really sold off about 60%. And now it's up 500% since then. I think Reddit is going to have one of these moments where some sort of metric turns on them and you see a liquidation. And then eventually it'll be a buy and people will get back in on it. But I think Reddit's already expensive, so very strange to see what the markets are obsessed with these days. I think is really interesting. Boring company, very boring. But doing very well, almost back to its all-time highs. IBM. Let's see if they have anything on the month. Inside month. So you're looking for a break above 230 and 36 cents to the upside for a buy signal, and a break below 204.07 for a sell signal on the downside. So I am doing a little bit of jumping between fundamental and technical analysis today because I am not a pure technician. I look at technicals because 90 to 95% of the trading volumes on any given stock market are governed by algorithmic trading. So if you know what the rules are for how they think, how the computers are programmed to think, it can give you a little bit, just the tiniest bit of an advantage when trying to time purchases or shorts. But yeah, so IBM, that's your risk range there inside month, and that would be valid for the next month. Did not stay inside quarter, so you just look for a breakout above that, but we're still in the fourth quarter. That yearly chart looks really good. Intel is struggling. Intel could be this is a level to watch going into the end of the year. If it closes above 2473, you could have a reversal strategy to the upside, but then you'd have to take out this year's high, which was 50.30. We're a ways away from that. We're sitting here at 23.97 right now. Intel's in the shit, and there is no fundamental reason to own it. They're doing terribly. They've missed every single major secular moment. Yeah, okay. Intel's GPUs, and then Jensen Huang's going to come out here and drop the 5090 on their heads, like between AMD and the ATI chips and Intel releasing a GPU in 2024, 2025, it's like Apple releasing Apple TV Plus when they did. You're late. You're so late. The demand for GPUs, yes, it's there, but it's right now what's cooking for all of Intel's competitors is server tech, right? So these juiced up GPUs, these juiced up server processors that are built on the same framework as a lot of NVIDIA GPUs and a lot of ATI GPUs. I have no faith that Intel can make anything well. And also they're unable to make chips in America at a profit now without subsidies. They're incapable of operating their American factories at a profit. That's super bad. That's like buying a Detroit automaker in the early 1980s, hoping for a turnaround. You know what I mean? Yeah, we are living in NVIDIA's world right now. I agree with that. It is crazy. I'll admit that, Scanner. It is crazy to see how badly Intel has been managed. It's the only semiconductor company that I follow of any size that never got back to its 2000 high, the dot-com bubble, right? Like, you look at Intel, it peaked it was around $500 billion market cap in the year 2000, right? Now look at AMD by comparison. AMD's stock peaked at $40 in 2000 and is sitting here, it hit 230 almost earlier this year, right? NVIDIA is another one that you'll just kick yourself if you look at the long-term chart. NVIDIA peaked in 2000, split adjusted, it was like 35 cents. And it's trading at 138 now. So, Intel massively missed, Intel missed the, entire ARM-based system-on-a-chip revolution, right? ARM Holdings, they used to own a piece of ARM Holdings. They sold it. They sold their chunk of ARM Holdings, and then ARM Holdings turned around and took over the world with Taiwan Semiconductor and Apple and Qualcomm, right? And Nvidia. And it's just, it's baffling to see how poorly managed this has been. Because, yeah, like, they kept investing in CPUs at a time where GPUs became the meta, right? They invested in weird crap, like they bought McAfee antivirus. They acquired Mobileye, computer vision. Like, they kept grasping for straws, but at a time when the obvious play was mobile chips, they were like, here's an Atom processor, here's a Celeron, and they were so obsessed with the x86 framework, because that's what their factories were built around, that they didn't even consider, like, what if we were a mobile chip maker? Like, they had no shot at landing an Apple contract, even if, regardless of Apple making the A-series chips, they had no shot. So yeah, it is baffling to see how bad Intel has been mismanaged this last 2 decades. But yeah, like, this is an example, though, Scanner, of a stock that is kind of near its lows, and I don't want to buy it because there are secular problems with it. Yeah. So no, it's in very rough shape, but the semiconductor industry as a whole is kind of on pause right now. Yeah, as a consumer, I agree with you, Lucci, and yeah, nice to see you again, man. But like, it is concerning because we want competition in the CPU space, we want competition in the GPU space. I don't know if Intel is a viable competitor in either spot right now. CPUs, sure, but even their CPUs recently have had heating issues, and they had to be underclocked because they were going to melt down. I think they fixed that in the recent release. I don't know what number we're at right now, but I still have an Intel processor in my PCs, which, you know, informs my choice of motherboards and all that stuff. But yeah, I have considered moving to AMD for stuff. But, you know, most importantly, like, look at the gaming space. PlayStation and Xbox and Steam Deck are all on AMD, and Nintendo runs on Nvidia. Intel missed that entirely. Look at the phone market. Apple makes their own ARM chips. Google works with Qualcomm, and they're using ARM chips. And obviously, you know, all the Android makers are, you know, using ARM chips. Samsung's using an ARM chip that they probably make. Taiwan Semi is the one fabricating a lot of these. So there are winners. There's winners and losers in this space right now. I am not currently in TSM or ASML, Funky Prime, but I am cognizant that they're the winners. Like, TSM is definitely the winner here. But, you know, there's regulatory risk to owning TSM right now, heading into this next administration in the United States. So I would be a buyer of TSM at lower levels if we get some sort of a further sell-off, because they just reported a great quarter. But they do, I would say that they have headline risk around tariffs, regulatory risks, and, you know, the off chance that, you know, maybe China just waltzes in there and tries to take over the country. I don't think that'll happen, but it is a risk. You should at least think about it. ASML, no, I don't own. I saw that they had a pretty solid week, but no, I don't own it. The people like ASML, TSM, Texas Instruments, they're kind of older, stodgier semiconductor companies. But yeah, ASML is interesting here, man, because, like, look at the sell-off in the last half a year. It's intriguing. I'm going to have to pay closer attention to it. Let's see if it has any... Ooh, outside quarter and down. That's why it's selling off still. So below 734.25 cents, it's a sell signal. So I would avoid it just for pure technical reasons right now. And then TSM is still looking okay. Inside year and up, but we're running out of year. You guys want to hear a stock I'm pissed about because I'm an idiot? I pointed it out. Hey, I think it was in August. I said, hey, Netflix had an outside month to the upside, and there was a potential buy signal. It came through. I should have bought it when it broke above 711.33. It's currently at 887. Damn it! Could have made like nearly 20% on that. I called it out in August. Yeah, I'm wondering if I should just get in now, but if I do that, the stock will drop like 10% the next day. So I'm going to just hold off. But man, Netflix seems to be winning right now, right? You look at how Netflix chart looks like, and then I don't know, let's compare it to Paramount. Oof. Netflix. Let's compare it to Warner Brothers Discovery. Oof. Yeah. Netflix. I don't know. Let's look at Disney. Oof. Yeah, I think Netflix might be doing well, you guys. I'm just pissed at myself because I called out you can literally go back and look at the episode. Like, I called out all the price levels and everything, and I was like, I even said, like, I should probably buy this. Like, what am I doing? I shouldn't even be looking at anything else. And then I, of course, didn't buy it, and now it's up like $180 since then. But, what are you going to do? Hopefully someone heard me say that and they bought it because it was a good idea. And that's part of why I do this show. Yeah. And Netflix is like, they always seem to be like 2 steps ahead of their competitors, right? So right now they're investing in live broadcasting, right? So they're coming after like traditional television. So you have WWE Raw is going to be broadcast every Monday on Netflix. They're doing a live football broadcast this year. I believe Netflix has the Christmas Day game. Yeah, and then, if you like crappy stand-up, Netflix is the place to be. Netflix was also like the first mover into like making their own content for streaming, right? So they like kind of adopted the HBO model. Where you have Cobra Kai and you have Stranger Things and you have Orange is the New Black, and there's always something around the corner over there at Netflix, be it comedy special or something. Their original content is pretty good. Squid Game, right? Like they got all sorts of stuff over there. And yeah, I agree. I think that they're probably the stickiest platform. I haven't canceled my Netflix ever. I cancel Hulu. I cancel Disney Plus. I hate Apple TV Plus. Yep. Super cheap local market shows the blow up globally. Yeah. That's the thing that's interesting about them, is like they have good taste. They really do. They pick their shots very well. And the stock market is rewarding them for that. But I think it's pretty impressive how they're executing when you compare it to all of their competitors. Everyone thought that, we're just going to spin up our own app. And it's like, it's not that easy. It's really not. But yeah, I've been kicking myself over Netflix for the past few weeks. Let's talk about my largest holding. Nintendo. You have a RevStrat month to the upside that came into effect just a few days ago. And now it's over. But if we get a continuation above this month's high, so you would have a buy signal above 1466 per share going into the last month of the year. You outside quarter to the upside above 1427 a share. Things are looking very good for the big M. Just on the chart. You had an inside year and down, followed by a reversal back into that, and now we're back above it. Nothing that crazy on the yearly chart. Important to note, we're still inside of this year, which was 2020. That was Animal Crossing. That was the pandemic. That was all that, right? And the stock had a low of $7 and a high of $16.51. We have not gotten out of this range yet. We're stuck. It's been 1, 2, 3, 4 years that we've been stuck in this range. If only there was some sort of catalyst for Nintendo. I don't know. Maybe like a new system. So yeah, my stance on Nintendo right now is I am not going to tell people to buy it or sell it until I get details about Nintendo Switch 2. And I don't mean some jaboo for going on a podcast saying his uncle at Nintendo told him something. I'm talking about date, price, specs. I need to know all those things. I need to know the features. I need to know the launch lineup. Then, and only then, will I tell people what to do. But I am concerned. I'm a degenerate. I put almost all of my money that is investable is in Nintendo. Almost all of it. I don't recommend any of you do that. Don't do that. That's a bad idea. But when I have conviction on a position, I go all in. And it makes it easier because I don't have to worry about other stocks. I just have to worry about the one. But I do have to worry about this one because Nintendo sometimes does really stupid stuff. You know, planned obsolescence or choosing an... like right now, for instance, their best-selling Switch is the Switch OLED, right? But there's rumors that this new Switch 2 is going to use an LCD screen because it'll be easier to mass produce and ramp at first. Logical. But your best-selling device is the OLED one. Like, you're going to really go backwards? Like, you're going to release a hardware device with a worse screen than the Switch? That's a concern I have. Another concern I have is the Joy-Cons suck. And I really want them to make a better Joy-Con experience. And then the other thing going on at Nintendo that I find very concerning is, like, they got so many wins. Like, you look back at this Switch era and the things that had to come together for them to get these wins. I don't know if they can recreate that. I really don't. And there's so much more competition in the space now. Steam Deck is a viable competitor. Microsoft is allegedly working on something. Sony is working on something. There's just a lot of competition in the space. iPhone's a very capable gaming device in a lot of ways. Macintosh has actually become better at that too. iPad has. So the novelty of Nintendo Switch in 2017 cannot be recreated in 2025. So, are they going to do something dumb? Or are they going to do something where it's iterative and good? You know what I mean? Like, I think this is the era where, like, if Nintendo's like the games. I'm glad you brought up games, Lucci, because the games that they were able to release on Switch, it was like a one-time benefit. Because this was the first generation, Lucci, where they combined their handheld devs with their console devs into one team. So instead of making Mario 3D Land and Mario 3D World, they just made Mario Odyssey, right? So you took these two teams and you were able to crank out Odyssey and Breath of the Wild in the same year, right? Or Animal Crossing, you know, you had Smash, you had these very large titles, but then you also had all these Wii U games already in the chamber that you could fire. So like Mario Kart 8 Deluxe, for instance, they shipped that and it's made over 60 million unit sales already. You can't do that again. You can't re-release Mario 3D World again, right? So it's like, what is that IP war chest that they're going to tap into for the Switch 2? We talked about on the Shack Together podcast, I think last week or a few weeks ago. Maybe the DS library is the next frontier for them. Bring back Brain Age and Flash Focus and all those things. The Castlevania Dominus collection is an example of that. It's like a really, really good port of the DS games from the Castlevania team. So I think that those are going to be some of the games. The other thing is, to your point, Lucci, let's just say Nintendo finally makes a 4K system. 4K games take more money and more time to develop. So their margins are likely going to go down. I don't think they're going to be able to recreate the margins, the profit margins that they had during the Switch era. I think that their sales on software, it's going to be tricky. Because like I'm sure they're going to have more $70 games next year. The other problem is they keep getting leaked. Their games keep getting dumped, like ROM dumps, like full ROM dumps before the game's even out. So there's just a lot. I'm just concerned. And as someone, I made a lot of money off of Nintendo, and I'm concerned. I really do think that the 4K movement has been, it's like, if we got 4K 60, okay, but most of the time it's 4K 30, I'm like, why? If you could just give me 1080p games that run like flawlessly well, I would be more into that than 4K games. And maybe that's what Nintendo will do, is like, at least their handheld experience will be better with this new chip that's going to be in it. But that's my concern, is like, what chip are they using? How are they considering, like, because even the current Switch, it's underclocked because they wanted to beef up the battery. There's people who overclock it and are able to get better performance out of the current Switch right now. So I am worried about how powerful their next system is, because that is going to affect development cycles, to Lucci's point. Like, if they don't have that same really impressive release schedule that they've had, but I kind of think that's why this system's coming out next year, not this year. They have to have a Mario game next year. We're going to get Metroid. Metroid's going to be that cross-platform launch, though. It's going to be on Switch and Switch 2. And then to your point, Scanner, the migration of accounts from Switch to Switch 2 is going to be easier than any other Nintendo hardware transition ever. I think that's going to be great for parents, right? That like, hey, it's the same account. Everything you bought already still works over here, so your kids can still play Animal Crossing, your kids can still play Kart on this device. I think that's a big deal, and we just don't know how consumers will respond to that. I will say, like, some of my friends who are like not the most avid gamers but own Switches, when they heard that news, they were like, okay, I'm getting it. Because it's like, you finally have continuity of purchases across generations on a Nintendo device. I know that's like not some groundbreaking idea. Steam has existed for a really long time, but it is for Nintendo. So we'll see how that is received. They seem to be pounding their chests about that a lot before we even see the hardware. But my number one concern is like, they make some stupid hardware decision, or there's some kind of gimmick in the device that hampers other things. Like, I think from what most people want is a Switch that runs better. Like, that's it. I want better controls. I think a microphone and a front-facing camera on the device would make sense. I want some sort of social feature, like a Miiverse to return, because they got rid of the share to Twitter button. They got rid of the share to Facebook button. So it's like, what are we going to do with all this content we're creating on the Switch itself? Yeah. The polished version of what they already have would be great. Like, but it's been it'll be 8 years. So it's like, even if they're still doing planned obsolete stuff, there's a chance that whatever chip they picked from NVIDIA is still going to be robust enough to have a good experience. And I do wonder if some of the some of the 4K stuff is just DLSS as opposed to like building a 4K game. And I know that DLSS needs to be implemented, and that takes time from the devs too, but it is slightly better than having to make 4K assets for everything. So yeah, like I said, there's just too much uncertainty around Nintendo right now for me to tell you what to do. But that's why I'm just kind of sitting here and waiting. And if you are a Nintendo shareholder, I think we get our dividends next week, so hooray. And yeah, you got the Mario movie in 2026. You got Nintendo music out now. There's a lot of catalysts for Nintendo here. The Zelda movie's coming out in 2030. I think if you have a long-term time horizon, you can hold Nintendo for the next 30 years. But if you're a little more actively managed, next year there might be a selling opportunity next year on the hype around the reveal, right? And then the reveal itself may we'll see. We don't know. But yeah, that's my thoughts on Nintendo going into the last month of the year. There are a lot of really compelling bundles right now at Nintendo for Black Friday. I saw Target has it for sale. The taxes overseas, man. Short-term capital gains, it's like there's no point. I get that, but buy and hold great companies for a really long time, it's a very good way to generate wealth for yourself. I tend to believe more in individual stock picking, which is kind of a forgotten art these days. But yeah, I'm a much worse trader than I am investor. So yeah, I also find trading's just hard. It's hard to be consistently good at trading, and you have to be on it at all times. But this show's about both. And when I talk about technical analysis, it's definitely more about trading. But you can use longer, like the thing about the strategy that I use, which is literally called the Strat. It was invented by Rob Smith, who passed away last year. But I want to give him credit. He broke down. He used to work in the Chicago Board of Options Exchange, like on the floor, and he basically broke down how the algorithms think. And it uses three different things, three different concepts. One is the concept of time frame continuity. This sounds really simple. Basically, you want to buy stocks that are going up on all time frames at once, because there's no one selling. If someone's buying on the minute chart all the way up to the yearly chart, there's no one selling, and anyone who is short is losing money. And then obviously, conversely, you want to sell things that are going down with time frame continuity. And then there's this concept of the broadening formation, which I can just show you here. That instead of this idea that stocks all trade with horizontal and vertical supports, it's like, no. Stocks trade in a series of higher highs and lower lows, which create these triangle-looking trends, which are essentially the broadening formation. You can see it in... See if I can pull up... I think I have some drawings on GameStop, yeah. So yeah, GameStop has a broadening formation that was created just this year. So, you have the high of this year, you have the low of this year, and that's a big ass risk range that it's right in the middle of. But the idea is you can draw these on any time frame. So like if you look at the day, you can even look at a 15-minute chart. If you want to draw the broadening formation today, there was your uptrend. There was no downtrend today, but that was the lower. Like, you find all the lower lows and you connect them, and you find all the higher highs and you connect them, and you'll notice that there's a series of these on every time frame. But yeah, you can. So that's the second pillar, is that all assets trade in a series of broadening formations. And then the third part, you've heard me talk about it a lot today, where I'm talking about actionable signals, so that you can find moments where a stock's trying to trade in equilibrium, and then you look for the break of equilibrium. So here, yesterday, GameStop traded within Tuesday's range. Wednesday, GameStop traded inside of Tuesday's range. Today, because we didn't trade on Thursday. So today it broke down below the Wednesday low of 30.51 and it sold off. So that was an actionable sell signal to the downside below $30.51. So those are the three pillars of the strat. One is time frame continuity, second is the broadening formation, and third is that actionable signals will guide price action. And actionable signals are basically built off the concept that stocks try to find price equilibrium eventually, and then there's a break of that equilibrium, and those will create trading opportunities. His name was Rob Smith. Let me see if I can... Yeah, he was the man. He worked for T3 Live, and he also worked for Sepia Group. But yeah, let me get you this man. I don't know. Is it okay to put Twitter up on screen? Let's see. This is a dangerous game, but here we are. F11? There you go. That's Rob. Actually, wait. Never mind. Yeah, you can't see shit. There you go. That's Rob. That guy. He is funny as hell. he used to do basically a live stream every day on his own website where he would break down he would call out all of these trades in real time. It was, yeah, I was a client, I guess a student of his, when he was at T3 Live, and then he went on to do Sepia Group, and he had taught me everything I needed to know. But we became friends, and we're still chatting with him a lot. But yeah, he passed away last year. So me, a couple other people who were part of his classes, we kind of carry on the strat. We're trying to teach it to as many people as possible. Yes, happy Black Friday game trading to you as well. Hope you got some deals and hope you ate some fun foods. But yeah. I don't know. Anyone have any questions, any stocks you want me to look at specifically? If not, I can kind of continue lower. There's a few more stocks we can look at before I go. Let's see. We haven't talked about Nvidia. This is my second largest holding. They had a solid quarter and they just sold off on it. So you had inside, outside week to the downside, but now it's back inside of the outside week. They don't know what they want to do, is my point. It's a stock does not have a buy or a sell signal right now. It would be a buy above. Oh no, the month's over. You need to break out above 152.89 to have a buy signal in the stock on the monthly chart. It seems like people might just be harvesting gains between now and the end of the year in Nvidia, because if you look at the year, my God, that's a hell of a year. It's opened the year at 49.27 and it hit a high of 152.89. So I think people are taking some profits, which is not the worst idea, but yeah. Oh no. Yeah. It sucks. Rob was, an otherwise very healthy man too. He ran marathons. He didn't do drugs or alcohol really. He didn't smoke. But yeah, he had some sort of tumor in his digestive tract and went to the hospital. 3 days later, he was gone. So yeah, you never know when people are just going to disappear from your life. So I guess the lesson there is tell people you care about them while they're around, because otherwise it'll be too late. But yeah, I told him a long time ago, and I never got there, unfortunately, but I told him if I could get my portfolio to $100 million, that I would buy him a Tesla Model S, just straight cash. We never got there, unfortunately. I think time ran out in that case, but yeah, maybe I'll buy his daughter the car or something. But yeah, it sucks. It sucks when you lose like a teacher like that or someone you care about. And yeah, the last year has sucked, but you know, I've met like it's interesting because like his community's still there, and we're all trying to carry on the strat because it's founded in logic and reason. Like nothing I've said is predictive. It's this happened. This is what you do if this happens. This is what you do if this happens. I'm never going to tell you this is what's going to happen because I don't have a crystal ball, and neither did Rob. And I think a lot of other technical analysis that you hear, people be like, oh, it's going to hit this moving average line and that's why you have to buy it. Like, who cares? It's just a line that you drew. And moving averages are backwards looking anyway. So yeah, I think, yeah, it's just funny. It's really funny, TJ, because it's like, on one hand, it's like, man, I wish I had more Nvidia. On the other hand, when it moves like this, you get frustrated. But yeah, we both bought it down there in like the 100s. It was a good time to buy it. I think that's going to be the case going forward with this stock, is like when there's regulatory rumors or there's rumors of tariffs or there's some reason that people are selling off the stock that doesn't really affect their actual results, it's probably an opportunity to buy. And with the current administration coming in, it really does seem like they're pretty pro AI, pro crypto. I think those things benefit NVIDIA. But there is uncertainty around the stock regarding regulatory risk that, is concerning, I would say. AMD is like we talked about it earlier. AMD peaked in July of this year at around $187. They peaked in March of this year. At $227.30. Currently trading for $137.26. So it's already down quite a bit. I think their problem is the stuff that they make that competes with NVIDIA's AI tech, they're incapable of making enough to make a dent. And I think they're trying to ramp that up. But there's also a rumor that the Biden administration is trying to get them to acquire part of Intel, which I think would be the worst thing AMD could do. AMD makes competent chips. I think their CPUs are on par with Intel right now. But there's nothing about the CPU industry where I'm like, oh yeah, you got to buy it here. I don't think like PC demand's going through the roof or anything right now. Their server tech is pretty solid. They've made acquisitions in that space to bolster it. So I'd say that maybe their server tech is good. ATI is good. The Radeon stuff they make is good. It's just that gaming is right now, when it comes to AMD and when it comes to NVIDIA, gaming's not the driving factor. And then the other problem with AMD specifically is they are inside of the PS5, they're inside of the Xbox Series whatever, and they're inside of the Steam Deck whatever, OLED and regular. So as demand wanes for those products, because we're entering year 5 next year for PlayStation and Xbox, but we're also entering year 3 for Steam Deck? These are not that novel anymore, and demand is not there for those right now. They've seen weakness in their console business at AMD. So right now, I would not buy AMD. I would wait. Because I pointed out the relative weakness in the semiconductor industry relative to the broader market right now, and I think that the semiconductor industry might be pricing in either a slower growth environment or tariffs. But both of those things are negative for consumption, right? So like I'm kind of in a holding pattern when it comes to the semiconductor industry, TJ. I hope that answers your question. Intel is poison. I really hope AMD is not forced to do that deal. That seems like a bad idea. Because like I said earlier, Intel can't make money making chips in America. And yes, Shack Pets is a free app available on Android and iOS. You should download it. Sorry, I'm just talking about what I'm seeing in the chat. For people watching this on YouTube who are confused, I'm talking to people who are in our Twitch chat. This is a live show that gets uploaded as a VOD. I'm not just hallucinating. I mean, maybe I do. Who could say? But yeah. Chips are kind of a mess right now. So, you want to hear a story about me getting out of a short before it ripped my face off? I covered, look, I lost about 30% of my money, in this short, because I shorted Take-Two at around $100. It went to $150 on me. I got out. Or no, sorry. I did lose I lost about 50. No, it must have been higher. I think my basis was above 100. Anyway, I lost about 30% on this short. And it proceeded to go up another $30. So I got out of it before this $35 move, before the earnings came out. I think Take-Two, it's going to keep running into GTA 6 at this point. The trailers are going to be catalysts for the stock to go higher, but also the release of the game, that'll be a catalyst for the stock. I just want to get out of the way. I don't have any shorts on right now, except for these Nikes that I'm wearing. But no, I don't have any short positions in the market right now. I do have some stock options that are effectively short positions, but I don't have anything of any size right now to the short side, because the markets are going higher largely. Going back to the concept of time frame continuity, like I look at this chart of the S&P 500 and I'm like, this is not the time to be short. We're breaking out to new all-time highs, never seen before. And regardless of how you feel about the administration coming in, the regulatory environment for corporations is more favorable. It will be. There's going to be lower taxes, less regulations. The companies are going to benefit, and the market's already starting to discount that. So I'm just kind of getting out of the way. But I do think that there's a history of Take-Two selling off when the GTA game comes out. Like after all the sales numbers come out, people like it's kind of a sell the news moment. So we'll see what happens there. But I'm just glad to not be shorted anymore and that I didn't lose an additional $30 a share on the short. Got Unity here, kind of pooting around here in the 20s. There's some rumors that Unity may be acquired by other companies. That would not surprise me because they're horribly managed, but they're like an engine for most mobile games out there. But yeah, you're talking about $9.7 billion market cap, so that limits the amount of companies, but that doesn't stop like Apple or Facebook or Google or Microsoft or Amazon, right? Like they can all afford that. They could do it in stock too. I don't think it's cheap. Trades of almost 5 times sales. They have negative profit margins. They have negative operating margins. Even their revenue is decreasing. They're in a bad space. But I think it would just be very Apple for them to acquire Unity. Yeah, I think that mobile games are largely built on Unity. And they tend to be some of the most profitable games out there, which is why I think a company like Google or a company like Apple, who have such a large footprint in the mobile space, why it would make sense there. Also, I think Apple worked with Unity pretty closely on the Vision Pro stuff, which, that went really well. But yeah, I think Unity is a stock to watch going into the next year. I don't find it cheap by itself, but I will readily admit that there's a risk that they get acquired. We do have an outside month buy signal to the upside that would become active if it gets above $24.85 a share, and a sell signal if it gets below this November low of $17.29. So obviously we're closer to the high right now, which is why I mentioned the buy signal. But yeah, you had an outside bar here. Every outside bar is the beginning of a new broadening formation, by the way, because you instantly have a higher high and a lower low. So there's your risk range for Unity next month. Let's talk Tesla. This is what a chart looks like when you buy the election. In case you're wondering. This is what a stock looks like when you buy a presidential election. We've never seen that one before, but this is what it looks like. This has nothing to do with their cars. This has nothing to do with their results. The recent price movement in Tesla is entirely due to the outcome of the presidential election. This is now a stock that will move on any Dogecoin news. It'll move on anything that the Department of Government Efficiency does. It will move on any SpaceX news. And yeah, they're going to make it very hard to compete against other... I don't know. If you just want a chart that represents rich white male privilege, it's Tesla. And seeing it go up, what was it? It was up 30% the week of the election. This is a proxy for cheering on Elon Musk as he attempts to destroy his competition and streamline regulation. I think it's insane that the stock moved like that. But, when you buy the election, Why not have your stock go up as a benefit? Yeah, the EV regulations, I think you're going to see the tax credits that we've benefited from the last 4 years. Those will go away. Yeah, it's fine and dandy, man. I own Tesla at like $2 a share, so I'm not going to sell it. Like, I own it too cheap to sell. And yeah, the SEC is about to get, I think the SEC is screwed. So let me get my proper basis. I just want to make sure I'm quoting my basis correctly. It might even be more impressive. I own it at $1.77. I'm up 19,362% on Tesla. So yeah, I'm not gonna sell. But I wouldn't buy it here. And I didn't buy it, like, after the revelations of this guy being a complete douche nozzle. I have not bought a share of Tesla, but I'm kind of stuck in it. Yes, that's my point. I got it before his current villain arc. He was still a douchebag, but he wasn't an outwardly racist, misogynistic, transphobic douchebag. He was just a regular, old-fashioned tech nerd D-bag. And money is money, Luch. Yeah, like, that's a really good point, man. I don't really have much religion when it comes to investing, because it's like, all these companies are corrupt. There's not a single car company out there that's not evil. There's not an energy company that's not evil. There's not a tech company that's not evil. They're all evil. So if you can make money off of these companies to subsidize something like Shacknews, for instance, which is what I do, or subsidize, like, donating money to charity, like, I have no problem I have in the past invested in a cigarette company and then taken my profits and donated them to, like, a healthcare charity. So it's like, you have to go where the money is right now. And I think the problem is right now is an era of almost universal grift, where there's not many honest companies out there anymore. There's a lot of companies chasing trends, a lot of companies just trying to have a trend attached to their name. Yeah. It's a bit messy when you start having religion about investing, because, like, I don't know. If you really start thinking about it, like, I don't want to own any of these companies from a moral standpoint. Like, most of them are bad, but can make some money. So, like, for me, it's like, I'm just trying to figure out what's my highest probability of making money. No, that's all I'm saying. Like, it's and the Tesla that I own, that's in my retirement account. So, like, I'm not funding Shacknews with my retirement account or anything. That's, like, my time horizon on that is, like, when I'm 60 or 70 or something. If you guys want to know what's in my IRA, I can just let you know. I'm pretty proud of it. I own the preferred share ETF, which pays, like, a nice, like, 5% dividend each year. I own Yum Brands, which is the company that owns Taco Bell, Kentucky Fried Chicken, Pizza Hut. They were spun off of Pepsi. I own Oatly, and they're getting killed. Oatly makes like, oat-based ice cream. Like, it's that oat milk-based ice cream. Which is such a random thing to own, but I own it. Yum spun off their China company into Yum China. So I own Yum China shares also. I own Apple for $4.12. I own some Citigroup. I own some GameStop. I own Nintendo. And I own Tesla at $1.77. So those are that's what I have in my IRA right now. And yeah, like I said, I have a very long-term time horizon when it comes to that shit. I try not to even look at what the value of my IRA is, because I'm just not touching it. But yeah, so I try to diversify, at least in my retirement. But yeah, I'm a stock picker at heart, and when I see a good stock, I kind of laser focus on it. And that's why I'm not focused on Tesla. I am much if you look at what I own right now, my largest holding is Nintendo. And investing in nostalgia is not a bad idea, man. It's really not. People love nostalgia. That's why brands like Disney, brands like Nintendo have value. I think the Mario movie is a perfect example of that. So yeah, I understand investing in nostalgia. I think Apple is kind of a nostalgia play now too. I don't think that their current products are that good compared to the past. I think they've lost the attention to detail that Steve Jobs and other people at the company had. But yeah, what do I know? Apple's at an all-time high right now. But yeah, it's a interesting time. I think this is kind of like the calm before the storm. Oh, so you're talking about like actually collecting retro gaming stuff. Yeah, there's tons of money in that right now. We saw a crazy bubble in it in 2021, 2020 with like those graded cartridges, and like if you have like an inbox, like if you have like an inbox Mario 3 or something, like there was these certain prints of different cartridges back in the day. Some of those are worth like six figures now, which is pretty wild. The thing about that whole space is you have to be super careful about fakes and all sorts of stuff. It's because it goes back to what I was saying earlier. We're in this era of grift right now and cheating people out of things, and that happens over in that space a lot. But yeah, if you have a keen eye and you're patient, you can make a ton of money. Like if you bought a bunch of Virtual Boys before the first Oculus dev kit shipped, you could have bought them for like $50. But now, like a Virtual Boy in box, that costs like $500 now or $400, which is insane. Oh, dude, I don't like Scanner. Did you see my video with the Master Sword? Yeah, you did win the Sea of Thieves controller. God damn, it's worth $700. That's impressive. No, yeah, dude, I'm with you, man. Like I have a very large spot in my heart for random video game nostalgia pieces. Like I have a Dreamcast. I have Rob the Robot. I actually have the NES with Rob the Robot bundle in box at the office here in Canton. So yeah, I have become a bit of a classic retro game collector, but it's like things that I really care about. So I have like a 64 DD with all those games, including the F-Zero expansion pack and stuff. So yeah, I get where you're coming from there, and it's tangible. That stuff's like gold, right? You can hold on to it and it'll gain value. I have like a first run Animal Crossing Switch still in the box. Yeah, I have a lot of stuff like that. But for me, it's like I think Nintendo is a way to invest in nostalgia, because what they do with their Mario IP, what they're gonna do with the Zelda movie, I think is pull at the heartstrings of a lot of people who may not have thought about Nintendo recently. But that Mario movie, man, is dripping with nostalgia. It's got it all over the place. But yeah, I'm probably gonna wrap up here. Still have to film the weather report, and I got no light, which means I'll go to probably go into Vapor Town here. Mm-hmm. Yeah, anyone else have a stock they want me to look at before I go? Are we good? You know, I should look at DJT. This thing. It didn't go to the moon on the election, oddly enough. It's still kind of just trading inside. That's interesting. You have 3 consecutive weeks of trading inside. Or sorry, 2 consecutive weeks of trading inside. Inside month. So a sell signal in DJT below 26.36 and a buy signal above 45.77. I think I talked about all the video games we have on this list, right? Yeah. How's Wendy's doing? Not great, not terrible. US Steel. back where it was. Oh yeah, Microsoft. Forgot about that. My bad. The tiniest, littlest RevStrat ever is being cooked in Microsoft. So you want to, so basically October traded inside of the September range. So it dipped below the October range in November. The low of October was 406.30. The low of November was 405.57. So that is a breakdown below it, and then it came back inside of it. Which means you'd have a reversal strategy to the upside above 429.33, which is the high of November. So there is a potential buy signal in Microsoft going into the end of the year. So if we do get that Santa Claus rally, Microsoft would be one of those stocks to benefit from it. The other thing I'm waiting for is, when is Nvidia going to be included in the Dow Jones? They announced that that's happening, but I don't think they have said when. I'm curious when they do that. It says November 8th, so I guess it's already happened. And it replaced Intel. So it was announced on November 4th, and it was executed on the 8th. So Nvidia is part of the Dow now. So that should have some kind of effect on index funds having to own it. I guess that'll be something to watch going into the end of the year. But yeah, there's Rivian kind of hanging out in Turd Town. Here's a very small stock that I own that went up a fuck ton today. I don't know why. I guess they had some... SoundHound does those automated call center things where you're like, say 7 to talk to someone. The automated part of it is run by SoundHound, largely. They license their tech out to a bunch of different call centers. Apparently, some analysts had some very nice things to say about it today, and it caused the stock to go up 17%. But yeah, it's a nice tiny company. I love the actual app. If you have SoundHound, it's great at detecting music. You can hum into it. It's actually quite good at detecting electronic music too. So yeah, I'll leave you folks with that. Yeah, I think that'll do it for the show today. Thanks for watching, everybody. And if you're watching this on YouTube, thank you for watching. Sorry you couldn't participate in the live. Maybe leave a comment if you have anything you want me to look at in the future episode. The next episode will be on December 31st. God help me. So I will be back in a month to look at... That's going to be a longer episode because we're going to look at the yearly charts and maybe set up some things for the end of the year. But yeah, it's I like the cadence of this show being once a month because it's really exhausting to have to do this every day. But I think also being able to look at the longer term charts and kind of remind people about the concepts of time frame continuity, I think it helps in the end of trying to explain like why things are happening. Not predicting why things are going to happen, but just kind of showing you here's what the computers are thinking. Because it is important to note that 90 to 95% of the trading volumes, it's computerized. It's algorithmic. And it's these companies buy server space where they're literally next to the NASDAQ and they plug into their servers. So they have a several millisecond advantage over everyone else on Earth with these dark pool trades. So once you understand who you're competing with, it becomes a little easier to win. And as always, I tell people to manage their risk. So if you're, you should never be losing sleep on a position. If you're losing sleep on a position, either sell it or sell half of it or something. You don't put all your money in options. Don't listen to some person trying to sell you a subscription to a newsletter or anything. You know, this is a free show. I'm not selling anything. I'll just tell you to, hey, go to these different places above me to support Shacknews. All these places are great. Every single one of them. Wonderful. Including the website. And yeah, we're working on some cool stuff going into the end of the year. We got our Shacknews Hall of Fame induction. We have the Shacknews Awards. And we have a Bubbletron update going into the end of the year. So we got several things to talk about on that front. I will see all you later. Thanks for watching, and manage your risk. Bye-bye.